Home sales just suffered the biggest crash in history. We're going to talk about that and more on today's update, economic financial news. Focus today on the housing market. Hey everybody, you're watching Bull Boom Bear Bust. My name is JJ, and happy Christmas Eve. It may be Christmas as you're watching this, and it's hard to believe that in just a couple days I'll have to take down this tree back here that I worked so hard decorating. Or maybe I'll be one of those people that keep it up till until New Year's. I know a lot of people have that tradition of taking the lights down after New Year's. But without further delay, let's get into the important news here on what's happening in real estate in the housing market. And yes, you did hear that correctly. Home sales took their biggest plunge ever month over month, worse than the 2007-2008 housing bubble that went bust. Let's go ahead and take a look at some numbers here. We're going to talk about prices, inventory, sales, all of the above for the real estate market. Now also, before I look at the charts and the numbers with you here today, a lot of people were predicting that the housing market would crash in 2022, including home prices. I was one of the few channels that said no, prices will not crash. In fact, where we're at today, or I should say as of November, because that's the latest data that we have, where we're at as of November, just last month, was that we're still up year over year on a national level. There's only a few select cities where home prices now are lower than what they were last year. So year over year overall, when you look at the whole country, we're higher than we were 1 year ago for the median home price. First of all, let's start right here with the median home price. And we look, median sales price, month over month, prices fell another 1.5%. Now this is looking at from October to November. So at this pace, we could see home prices continue to drop. If this continues to happen every month, we could see another 10 to 15% in home prices over the coming 1 year. Now, the more important number, in my opinion, is to the far right here, and that's the year over year change. And it's still positive. It's still 2.6% in positive territory. So again, all the channels out there that predicted a home price crash were wrong. Now, why were they wrong? Well, I don't think they realized that there's still easy money out there. There's still a lot of lending going on. And I don't think they realize how much cash is out there buying up homes still, even though sales have crashed. There's still enough big money, still enough cash buyers out there to keep prices from actually plunging. And we'll certainly get to that here later in this video, but let's take a look at sales. And we see that in November, it was 420,000, a little more than that. And that was another 5% drop from the month prior, but down 35% year over year, namely because higher mortgage rates and because most non-cash buyers have been priced out of the market now. When you look at the monthly payment and the carrying costs of a home, and all the people that have little to no down payment and little to no savings, which is actually most people now in the United States. We go down here to pending home sales. We also see a similar drop, even a little bit more than the actual number of homes sold. So things are not looking to improve much, even with the dip in mortgage rates that we saw over the past 4 to 6 weeks now. All right, now this next line tells the story. This is new listings, and we see that it's down month over month and down 28% year over year. So home owners at this point, they're not yet getting desperate enough to sell. Of course, some of them are, but the drop off in sales tells us that homeowners are deciding to hold off on putting their home on the market, or at least owners of homes are deciding not to sell. Like, we're not seeing that big wave of sellers and that big surge in inventory like we saw in the previous housing bubble. But I think that's going to change in the next 6 to 12 months, drastically change as we go into 2023, because a lot of sellers right now, or I should say a lot of homeowners that are not yet sellers, will be forced to look at selling their home because of the drop off in household wealth, because of the vanishing home equity, because of the cost of living and the plunging savings rate for most households. So even homeowners today that don't want to sell are going to be forced to at least look at selling to try to get out from under this debt and inflationary pressures that we're seeing across the country. Now we look at a non-seasonally adjusted number next, and that's months of supply. And we're actually up about 1.3 months compared to 1 year ago. Right, let me move my picture up here so we can look at the bottom of the data here. Days on the market has increased now, 15% increase year over year in the number of days on the market for the typical home for sale. And we see the average sale to final list price ratio also went down another 2.2 points from 1 year ago. And this data is provided by Redfin. So there's also some Redfin specific data in this chart. And that also shows us how much higher the mortgage rate is from last year. It's actually dropped a little bit though from the month prior. Now let's jump over to the number of homes being bought for cash. And we told you this is going to be one of the reasons why prices would not drop. A lot of cash buyers come in when mortgage rates go up because there's less competition, prices are down, and it makes it easier for cash buyers to go in and make the highest bid because they're not competing with people taking out loans. Because again, most of the people that have to take out loans or mortgages are now priced out of the housing market because of the high home prices that are still high. Even though they've come down somewhat, they're still high, and that monthly payment's even higher now with the higher mortgage rate. So look to the far right here, and this is the percent of homes purchased with cash, and this is at an 8-year high. It's almost 32% as of October. Now, in my opinion, the more interesting part of this is that investor purchases actually fell a lot from the second quarter to the third quarter. We're down actually about 30% as far as the number of homes sold to investors. The reason this number is still high is because this is a percentage of all sales bought for cash, but sales are so low, the percentage of cash buyers now looks even higher because you're comparing it to the number of homes sold. So even though investor activity has dropped from the previous quarter, we're still seeing a big chunk of homes that are sold are to cash buyers. So as you can see, nearly 1 in 3 homes purchased with cash. That tells us that the little guy, the average working person, the working poor now that many call them, are not the ones purchasing a lot of these homes. A lot of it's already people that are doing pretty good with cash. Investors, people looking to get investment homes and vacation homes. Now, let me close this video out by giving you the top 10 cities where prices are dropping the most. And we're going to look from July to the end of November, and that's when home price drops really started accelerating, right? All right, so number 10 is Las Vegas. Prices from July to November down 1.4%. Next is Washington, D.C., down 1.6%. Followed by Dallas, Texas, down 1.9% from July to the end of November. Next, Portland, Oregon, down 1.9%, just like Dallas. We see Phoenix, Arizona, down 2.1%. The sixth biggest decline is Denver, Colorado, down 2.3%. Next, we go out to California here, and we see Los Angeles is also down 2.3% since July, followed by San Diego, down 2.9% since July. Number 9, we see Seattle, Washington, down 3.9%. And the biggest price drop from July to November of the major metropolitan areas is San Francisco, down 4.3% since July. Now, there were some smaller cities that saw just as big or even bigger price drops compared to the cities that we just talked about. They didn't make the list because they weren't large enough to be included in the largest cities with the biggest price drops. Examples are Boise, Idaho, down about 8%. Coeur d'Alene, Idaho, down by about 7%. And then, of course, you have a lot of smaller cities that are surrounding the larger cities out in the suburbs that are seeing price declines, just like they are in the city that they're on the outskirts of. Like on the outskirts of Phoenix, several cities saw price drops. Mesa, for example. But the price drops that occur in the cities also affect the surrounding areas, right? So when you look at the entire metropolitan area, there's just too many cities to single out as far as dropping prices. Now, what do we see happening in 2023? Well, further weakness in prices. Even if the Fed were to come in and cut rates, if mortgage rates were to get slashed, it's really hard to turn the ship around once things start dropping, especially with the combination of the high home prices and the high cost of living. People are just going further into debt every month. and that includes home owners. So we're in 2023, in my opinion, we're going to see a combination of a lot of different things come to a head here. A combination of desperate home owners looking to put their home on the market as they approach the financial abyss. A surge in consumer bankruptcies. The car repo crisis is going to accelerate. We see that repossessions have been increasing over the past several months, and it's likely going to get a lot worse. And then what happens with all that, with lower spending, more people losing their vehicles, well, more job losses. And if we see higher energy prices, that could actually add on top of the pile of all the problems that people are going to have to deal with in the 2023 economy here in the U.S. Right, I hope everyone liked this housing market update. Please let me know what you think down in comments. What are your predictions for the 2023 housing market? Please make sure you hit that subscribe button if you like what we talk about. We'll bring you more housing news when we get enough good data. And of course, we always talk about financial, economics, etc. with our daily doses of economic reality. So talk to everybody very soon. Thanks for being here. Bye for now. Big love.